Good morning, Steve Reed in Chicago with the morning grain comments. Pretty much follow through from what we saw on Friday overnight. Corn prices, wheat prices up, and bean prices down. We still have a hangover from USDA's numbers on Friday, especially their corn numbers, which they lower the crop and they lower the carryout, and the estimated D1 stocks lower than the average trade guess. So we still could see some more short covering in the corn market, but I think the market feels on the March corn we could start running into resistance at 440 to 450, considering we still have 10.5 billion bushels of corn in the U.S. on December 1 versus 8 billion a year ago. And we also are looking ahead for 2014, and assuming normal weather, the carryouts could grow from what the USDA said on Friday. We also seen a lot of private estimates that suggest the final carryout will be higher than what the USDA said due to possibly lower feed numbers. In the beans, we have the tale of two worlds. The nearby beans are tight here in the United States, and that keeps things supportive, although we are watching pretty closely South American weather, which looks mostly favorable, and when they start harvesting, we could see some pressure in the nearby bean market. We also are looking at China, where we're watching soybean meal prices inside China continue to erode lower, suggesting either the record imports of beans is beginning to be too much for them, or the demand for meal domestically might be slowing. So all those factors offered some resistance to the overnight bean market. Wheat rallied. We had made new lows last week. Funds record short. USDA numbers were not that big of a deal, but we also saw that Egypt came in and bought a cargo of U.S. soft breadwinner wheat, which suggests that maybe U.S. prices are now competitive to the world buyers, and that's helping wheat bounce a little bit. Again, in the big picture, I think people feel that at this 440, 450 on the March corn, we're going to run into resistance. Eventually, it might pull back to 380. New crop might be under pressure because of favorable 2014 weather. For the soybeans, maybe we test $13 in the March beans, but eventually move back down to $12. And new crop beans made new contract lows last week, and they should go down to $10 if we have normal weather. The wheat market might settle somewhere in a trading range for a while here because of number one, being oversold, and number two, being competitive in the world as far as price is concerned. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
That's his favorite place. She was at the football game last night.